Welcome back to Griffonomics, where we conduct financial investigations to define the risk before we look at the reward. Today we're diving into Ondas Holdings, ticker ONDS. Ondas is executing a high-risk neoprime strategy, leveraging an approximate $840 million pro-forma war chest to acquire a dominant detect-to-defeat system of systems in the counter-UAS market. But this thesis is currently obscured by extreme valuation and the near-term dilution and accounting noise stemming from its December 15 capital restructuring.
That's a perfect way to put it, that tension, because the filings we've seen recently, they really show why investors are struggling. It's hard to separate the real strategic signal from all the immediate accounting noise.
Right.
I mean, you're watching a management team try to make this huge industrial scale leap, but the short-term filings just look messy. Our job today is to really clarify what they cleaned up and why they needed that clean slate for this, well, this high-stakes gamble they're taking.
Okay, let's unpack the mess first then. There was a pretty complex 8K filed right around now, and it was the catalyst for a lot of volatility, some really severe headline shock.
Yeah, that's the one.
Right.
Dropped December 12th, 2025. And you're right, it's complex. But the goal really was pretty straightforward. It was all about consolidation.
Just cleaning things up.
Exactly.
Yeah.
Ondas wanted to simplify its whole corporate structure. They called it an exchange. It was all about converting existing debt and some preferred shares from its subsidiary, Ondas Autonomous Systems, or OAS, into common stock.
So the end result is they now own OAS completely.
100%. They successfully cleaned up the capital table at the subsidiary level, which removes a ton of complexity.
So strategically, it sounds necessary. You simplify the structure for growth for future M&A, but the market's reaction was, swift and very negative. What specifically triggered that investor panic?
Well, there were two big things. First, the dilution was pretty significant. This exchange meant they had to issue somewhere between 6.89 and 7.33 million new shares of common stock.
And when you flood the market like that,
The existing shareholders feel the pinch immediately. It doesn't matter what the long-term strategic reason is, that's just instant pain.
and the second point was that accounting charge. That had a huge, scary headline number attached to it.
Precisely. The company projected an estimate, I think it was $56.6 to $60.5 million one-time non-cash accounting charge for Q4 2025.
That is a massive number on an income statement.
It is, and even though management kept saying it's non-cash, the market often panics anyway.
Okay, so explain that for the average listener. Why does a non-cash charge cause such a sharp reaction? If money isn't actually leaving the bank, why should you care?
That's a crucial distinction. Think of it this way. Cash isn't leaving, but the value of assets or liabilities on the balance sheet is changing. It's an accounting write-down, often tied to old, complex financing deals. It makes the income statement for that quarter look terrible, maybe showing a huge loss, but it doesn't actually affect their ability to operate or make acquisitions.
Because the cash is still there.
The cash is still there. It's like a necessary surgery to clean up the financial plumbing. It just gives Wall Street analysts immediate indigestion.
Okay, so short-term pain for long-term clarity. Now that the structure is cleaner, let's dive into what they're actually building. The core business, Ondas Autonomous Systems, is where the real growth story and that neoprime thesis is.
It absolutely is the main event. The thesis is that Ondas isn't just trying to sell one type of drone. They're building this vertically integrated, high switching cost ecosystem in the counter-UAS space.
A system of systems.
A detect-to-defeat system of systems. That's why we call it the neoprime strategy. They're integrating the entire kill chain, just like a Lockheed Martin would, but they're doing it at warp speed by buying the tech instead of building it.
That's fascinating. I mean, how does a company this size even try to execute, like a major defense contractor?
It's all about that war chest we mentioned.
Yeah.
You get to bypass the, decade of internal R&D that a traditional prime would need. They just buy mature, battle-tested technology and plug it right in. The goal is to get from detection to neutralization faster than anyone else.
Okay, let's break down the layers of that tech stack. Where does this defense start?
It starts at the most sophisticated layer, the cyber layer. That handles the soft kill component, and it comes from their subsidiary Sentrycs. This is where they use something called Cyber over RF, or CoRF.
Walk us through that. Cyber over RF, protocol manipulation. What does that actually mean?
Simply put, instead of just blasting a drone with jamming signals, which is messy and interferes with, say, an airport's vital system.
Right, total chaos.
Total chaos. Sentrycs actually communicates with the drone. It basically hacks it. It finds vulnerabilities in the drone's own communication protocol, and it assumes control.
It just takes over command.
Exactly. It overrides the pilot's commands and can land the drone safely wherever they choose.
And that seems to be the key advantage, especially for civilian infrastructure. Landing it safely is a huge deal.
It's not negotiable in urban settings. Zero collateral interference. If you jam a signal at an airport, you could disrupt passenger planes. If you shoot it down, you have falling debris. This way, you neutralize the threat without creating a new one.
But if the drone is operating autonomously without a radio link, you still need another solution, right?
And that's where the hard kill comes in.
Exactly. That brings us to the kinetic layer. That capability comes from the Iron Drone Raider. It's an autonomous interceptor that uses nets to physically capture or disable a drone that isn't responding to the soft kill.
And they're not just looking at the air, they're building out the ground layer too.
Correct. They're integrating unmanned ground vehicles, UGVs, and even subsurface threat detection through acquisitions like Roboteam and Forum Defense. It's becoming a true multi-domain protection system.
And this isn't just a concept anymore. The source material points to some pretty serious commercial validation. That's the most compelling part. They just secured an $8.2 million repeat order from a major European security agency to protect a second international airport.
A repeat order, that's not a pilot program.
No, that's an infrastructure rollout. When you get a repeat order of that size for that kind of critical infrastructure, it signals your system is mature and it works. It can win against much bigger competitors.
Okay, so that tech integration leads us right to the money, the capital strategy. That balance sheet is just, it's unprecedented for a company this size.
It is their core competitive advantage right now.
Yeah.
Through a really aggressive equity issuance strategy, Ondas built up that impressive $840 million pro-forma cash balance. They're weaponizing their balance sheet.
And as I said, they're skipping the R&D decade. They're basically a public venture capital firm for defense tech.
That's the perfect description. Why spend 5 years and $100 million trying to build something when you can spend $50 million to acquire a proven revenue-generating asset right now? The planned Roboteam acquisition is a great example. It's projected to add $30 million in 2026 revenue immediately.
And this whole strategy is being formalized under a new arm, Ondas Capital. What's the mandate there?
Ondas Capital is laser-focused.
Yeah.
They're targeting combat-proven IP, mostly coming out of conflict zones like Ukraine and from allied nations. The whole idea is speed and effectiveness. They're buying tech that's been validated under fire.
Can you give us some concrete examples of the kind of IP they're targeting?
Sure. They're looking at things like the Wasp suicide drone, which is what we'd call an attritable drone platform. And they've got a planned $11 million investment in something called the Drone Fight Group. It's all about finding tech that's ready for mass production now.
Wait, a attritable drone platform? Break that down. What does attritable mean in simple terms?
Great question. Attritable just means it's designed to be high volume, disposable, and cheap. The old model was these multi-million-dollar drones you tried really hard not to lose.
Right.
The new paradigm, which you see in Ukraine, is you overwhelm the enemy with thousands of low-cost, effective drones that are meant to be expendable. Ondas Capital wants to buy the IP for those systems to meet that global shift in demand.
So we have this high-speed defense growth story, but now we have to talk about the company's other half, because there's this entirely separate, slow-burn regulatory story that's currently a drag on revenue. Let's shift gears completely to Ondas Networks.
It's a complete narrative break, you're right. While the defense side is in hypergrowth, the network segment is almost a non-event from a revenue perspective. I think in Q3 it generated only about $82,000.
Which is nothing, so why should any investor care about it? What makes it so strategically important?
Because they secured what is essentially a regulatory monopoly in the North American rail industry. The Association of American Railroads, the AAR, selected their .16 standard as the mandatory upgrade for all AAR-owned frequencies. That's 900, 450, and critically, the 160 megahertz network.
And why is that 160 megahertz network the big one?
Because that's the crown jewel. It's the mission-critical communications backbone for the entire North American rail system. It's what runs positive train control, the mandatory safety system. So by getting their standard selected, the AAR has effectively mandated a system overhaul for thousands of miles of vital rail infrastructure. It's an unassailable moat.
That sounds less like a slow burn and more like a long-dated, high-margin annuity just waiting to happen.
That's the opportunity. It offers this huge, high-margin recurring revenue potential that's totally uncorrelated with the defense cycle. The tension is it's all contingent. It hinges on the Q4 2025, Q1 2026 field trials being successful and converting into those big fleet-wide deployment orders.
Right.
And that just takes time in a regulated industry, even with a mandate.
So we have these two completely different entities. under one roof, which brings us to the final question. You have this incredible strategy, this huge cash pile, but does it justify that sky-high valuation? We're talking 119 times trailing EV to revenue.
Look, the clear verdict is no, not yet. This company is priced for absolute perfection. That valuation prices in the complete and flawless execution of their entire 2026 thesis, including hitting that aggressive $110 billion revenue target. The risk is all on execution.
So since we're here to define that risk, where are the biggest cracks? What are the primary execution risks you see facing that 2026 target?
Okay, number one is just the colossal integration risk. You're talking about merging 5, 6, maybe more distinct companies, Sentrycs, SBO, 4M Defense, Roboteam, into one seamless system of systems. That's not just tech, that's merging cultures, supply chains, sales teams. It's incredibly difficult to do.
And if that integration fails, the whole system of systems idea could just collapse under its own weight.
Absolutely. The second major risk is the fragile revenue base. The Q3 numbers show that 90% of the revenue came from a single customer. Now, that's a testament to the product, but if that contract gets delayed or a budget shifts, it would be devastating to their trajectory.
A huge vulnerability.
Huge. And the third risk is what I'd call flawless conversion. They've told the market to expect a big purchase order in January 2026 for a border protection system involving thousands of drones. If that PO is delayed by even a couple months, the entire $110 million 2026 target becomes impossible.
And the market has zero tolerance for a miss at this valuation.
Zero.
So, to summarize, Ondas is betting its massive cash position on consolidating a fragmented market. But that market is demanding immediate, perfect operational output to justify the price. A stumble on integration or a miss PO could mean a painful reset.
Indeed. And the real metric for you to watch over the next 6 months isn't just the acquisitions closing, it's the quality of the customer base. Can they secure that crucial US DoD or DHS win they've been talking about? That's the win that signals true institutional adoption and diversifies away that single customer risk.
Risk defined, portfolio protected.